Hello traders, welcome back to one more episode of weekly sectoral analysis. So in the last 2 weeks, we can see that the Nifty has been able to correct by just less than 3%. And today in this particular video, I'm going to even include the monthly time frame chart, because overall when we are in a big bull run, taking cues from the monthly time frame chart is at times very important to filter out whipsaws. All right. So first, if you just have a look at the monthly time frame charts, I think things are okay, things are fine. In this entire run, bull run, we had a dip, we started giving a pullback, and now within this rally, these two bars in last 2 months is just a mere pullback, nothing more than that. So I would say that the monthly time frame chart so far is fine. Even the displacement of the moving averages is also fine. No problems from the monthly time frame charts. Going ahead in the weekly time frame chart, if we look properly, then you will say that the displacement of the moving averages is okay. I will say yes. But we are seeing one peculiar thing over here, an inverted hammer over here and a second inverted hammer over here. Now, probably this is coming not from the same level, but from the same zone. Zone is probably a mixture of multiple levels. And why this is happening is because if you check properly, this short-term top just below than 25,200, because if you remember in a couple of weeks back, or probably last week also, I told, if you want the market to go ahead to shoot higher, then you will need to clear up 25,200 minimum. And this is coming on the back of the 61.80% Fibonacci retracement of this entire correction. And also we have this candlestick cluster. So that is the reason markets are struggling near this zone of 25,200, 25,250. So that will continue to remain as an important resistance. Now in the weekly time frame charts, things are choppy. The trend is flattish. Momentum is slightly on the downside. Even the momentum and the trend both is down on the daily time frame chart. Now, if you just zoom in a little bit in the daily time frame charts, this is the recent support, which is 24,344, which is the recent low. If we break this and if we sustain below it, then the next support will come over here, which is 24,200 and 24,130. This is going to be an important zone. Why this is going to be an important zone? The reason for that is probably because this is also the 38.20% Fibonacci retracement. And once again, if you check the daily time frame charts, if you check over here in the daily time frame charts, there is a small candlestick cluster over here. Okay, so this candlestick cluster, which accompanies with the level and the 38.20% Fibonacci retracement in the weekly time frame chart, they both add up together and make this support a strong support. Okay, so the next important support is this recent low. Once this is broken, then we'll have the next support at 24,200 to 24,130. All right. Now going ahead in the Bank Nifty, if you look at the monthly time frame chart, I should say that yes, the trend is up. The displacement of the moving averages is fine. Only thing which is slightly, which I don't like, something that this candle is slightly on the higher side, which pushes the momentum a little bit on the downside. Second thing, if you look at the weekly time frame chart, what has happened over here is we have closed below this important support band, which I shared with all of you last time, which is 54,436 to 53,891. It has closed below it. So we should be understanding the importance of this support band. See, this support band had been so important because when this zone was not a support but a resistance, it was pushing Bank Nifty on the downside by a pretty big margin. So Bank Nifty breaking this support is pretty big thing, And according to me, the momentum is extremely strong on the downside. Only the good part is that the RSI is oversold. So in short term, if we just give a pullback little bit here and there, I don't think I will be surprised. But the next important support zone in the bank Nifty will come at possibly 52,200, sorry, 52,900 to 52,750. So possibly there is a 140 to 150 point band, which is a support band between 52,900 and 52,740. Okay. Private banks. Now, private banks, I think so, are the culprits due to which the banking pack is falling. And I made myself very clear when Bank Nifty had given a very good pullback. I made myself very clear that in case if the private banks do not rally, then there will be problems in the market, and same thing has happened. Private banks are the sectors which have dragged the markets on the downside. Monthly time frame charts pretty okay, momentum not that great. This is the 50% retracement support in the private banking space, which is very important. You can see these were acting as two important highs previously, and now we are at the same level. We are also at a decent, not very important, but a decent support in the daily time frame chart in the Bank Nifty spot. And if you just try to convert this chart into a line chart, you will see a slight change in momentum, just slight. I mean to say is this is not exactly a divergence. This is not a positive divergence. And by the way, I'm going to make a video on positive divergence very soon on RSI, and I'll share with all of you very, very soon. Okay, so if you see this, yes, RSI is making a higher low, and price has made a lower low, but this is not a positive divergence. But still, I would consider it that as we are at a support and we are having a higher low in price, plus RSI is oversold, plus the price is away from the moving averages in the short term. So there is a slim chance, I'm not giving a very high chance, but a slim chance of a short-term pullback, maybe of 1 or 2 days in the private banking space. But always understand, my friends, that as we saw in the Bank Nifty, supports are meant in order to push the prices higher, but this is again a probability. This is not a surety. So let's wait for the next week and see what happens in the price. PSU banking space. PSU banking space in the monthly time frame chart is fine. Trend is up, and price has retraced, but the retracement is shallow. It's not that big. Even in the daily time frame chart, even in the weekly time frame chart, what I should say is that we are consolidating. Prices are not moving higher, but either I should also say that they have not broken this low, which is a good thing. It means that at least the PSU banking pack is outperforming the Bank Nifty by falling lesser. If we close below this, then yes, then we could slightly dip on the downside, and the next support could be probably in this zone. But so far, so good, I would say. Energy pack, monthly time frame chart, not good. Things are not that great. The momentum also in the monthly time frame chart was trying to improve, but it could not. The weekly time frame chart doesn't seem so great. Daily time frame chart also doesn't seem so great. In fact, the RSI has made a lower low. And in case if we break this zone in the daily time frame chart, and I think the next support will be at 33,100 in the energy pack, and then after 33,100 after this zone, I think we'll come at 32,600. Okay, and 33,100 is somewhere here in the 33,150 to 100 is somewhere in the weekly time frame chart, and the next one is this support. Okay, so trend, momentum, everything is negative in the energy and the oil and gas pack. Auto pack continues to outperform. Is monthly time frame chart is supremely delightful to watch. Very strong chart, extreme good momentum, extremely good trend. The weekly time frame chart seems to be in an uptrend, but I think some sort of profit booking consolidation cannot be denied, because you can see there is a pretty large gap over here, and generally weekly gaps are, I mean, they do exist, but they're not that much evident probably in the price which we see in the weekly time frame chart. So as I told in my last video also, if anyone is holding long only positions in the auto pack, you should consider trailing your stop losses very strictly. And you can also see a hint of dark cloud cover sort of pattern. It's not an exactly dark cloud cover pattern, but it is, you can say, sort of different version of dark cloud cover, but it is certainly evident that some sort of profit booking is visible. Even in the daily chart, you can see some sort of profit booking is visible. So I think I'll continue to maintain my stance that trailing the stop losses would be a better idea. Consumption pack, again, strong charts in the weekly time frame chart, in the monthly time frame chart, and in this time frame in the weekly. If you compare it with the auto pack, then I should say that the consumption pack is slightly more stronger, because the candle over here has not been able to open above the high of the previous week. If it would have opened above the high of the previous week, then if it would have closed like this, it would be slightly more weaker. So, but still, I think the stance should be very, very similar. We are at a decent support band. Whether this will be closed, whether this gap will be closed or not, I have no clue. But trailing stop losses should be the goal in the trader's mind right now. Finance pack continues to remain weak in the daily time frame charts. RSI making a new low, sign of strong momentum on the downside. And in the finance pack, you'll have to be a little bit watchful if anyone is holding derivatives short positions. If you're a trader who is trading in derivatives, then you'll have to be watchful about one thing, that we are approaching decent support. This is not a very strong support, although we should not consider it as a weak support. And the next one is this zone. This zone is going to be very, very powerful. Somewhere you can say in the zone of 25 250 to 2530. The first support will come up at 25,379. The second will come up at 25,250, 2530. So we are now approaching extremely important supports in the finance pack, and the same support is visible in the monthly time frame chart. And monthly time frame chart is already in the uptrend. So what happens over here will be very, very interesting to see. Okay. FMCG Park continues to elude us, continues to surprise us by choppiness, volatility, non-directional movement in the market, and I would like to stay away until and unless some sort of clarity is visible. So no comments on the FMCG pack. IT pack continues to remain weak. The monthly time frame chart, you can see prices have dropped again, despite such a big hammer, despite a beautiful candle. Again, it has come down. The weekly time frame chart also continues to underperform. The daily chart also continues to underperform. So I think weak IT pack will remain on the downside, and it will remain a weaker sector. Metal pack, again, it continues to outperform. Now you will say that why are you saying outperformance despite the metal pack has corrected in the last 4-5 trading sessions? What I'm trying to say, what I'm trying to make my point over here is, metal pack was a sector which had initially rallied pretty nicely, and rather than collapsing like finance or private banks or real estate or IT pack, it has fallen less. It has consolidated. It has fallen less. And if you check the daily time frame chart, you might not understand, but if you look at the monthly time frame chart, things will be much clearer. That is the reason, my friends, that today, since this was an end of the month, I thought of inculcating the monthly time frame charts also to put some little bit of light on few sectors which are holding on the strong side as of now. So yes, metals continue to outperform so far, and they're still consolidating. And if you look at the monthly time frame chart, the wonderful thing is that this low has not been able to broke. Yes, we have made a lower high, I agree, but we are not even breaking this low. We are not even breaking this low. So I think we'll come to know very, very soon what is going to happen in the metal pack. Infra monthly time frame chart, all right. Weekly time frame chart consolidating, but we are, knocking at the hell doors. And why you're saying knocking at the hell doors, what I'm trying to mean over here is that, see, this is a support, 38.20% Fibonacci retracement of this entire bull run. Now this support is also at a place where we have a candlestick cluster. All right. Now the same thing, if you have a look in the daily time frame chart, you will understand what is happening in terms of momentum. This is the same support, by the way. And now you can see RSI dropping down. You can see prices dropping down. You can see the displacement of the moving averages is negative. So I think if we close below this, okay, if we close below it, if we sustain below it, and if even overall market remains negative, you probably will see a little bit of negativity in the infra pack in short term. Pharma in the monthly time frame chart is slow, steady. It's okay. It's fine. In fact, the last month was better. This month we have retraced a little bit. In the last 2 weeks, pharma pack, I think, tried to move higher, and then suddenly due to the drop in markets, even the pharma pack has corrected. I think I would like to wait again and give it a little bit of time, taking into consideration that this low should not be broken, recent low. Whether it is able to move on the upside or not, I think only time will tell, and we need a little bit of confirmation before taking a view, before taking a bullish view on pharma, because understand one thing, that the displacement of the moving averages in the monthly time frame is fine, in the weekly time frame is fine, but in the daily time frame it's still on the weaker side. So we need a little bit of confirmation. Even over here when pharma pack started performing, just due to one heavyweight stock, everything collapsed. So is pharma pack going to act as FMCG and go sideways, or this was just a short-term dip and now we'll move back on the upside? I think we'll have to wait with time to understand it. PSE sector weak in the weekly, daily time frame charts. RSI supremely oversold near 21, and we are approaching important support bands. And if you try to use Fibonacci extension over here, right, you can see that we are near important supports. If you break this one, the next one is somewhere here, 8916, and before that we'll get the more important support, which is the weekly support, 50% retracement, which is going to be possibly 9090. All right, but taking into consideration that RSI is well below its support level, well below its oversold level, you have to keep watch on this particular sector. Realty pack, I think, is one of the sectors is very, very strangely poised. Now you will say why it is strangely poised. I'll explain you. First, let's have a look at the monthly time frame chart. In the monthly time frame chart, what we can see is superb rally and equally superb correction. Displacement of the moving averages is positive, but overall in the last few months, real estate, what it has been able to do is it has just gone up and it has shot up. It has not been able to convert its gains into consolidation, and after the consolidation shooting up higher. It's not been able to do that. First thing. Second thing, if you move to the weekly time frame charts, we need to understand that prices are currently trading at 61.80% Fibonacci retracement. Generally, 61.80% is an important support band. Trend down, momentum down. Okay, this is the weekly time frame chart. Now, as we move to the daily time frame chart, now things get a little bit more interesting. Now you will understand that over here we had been trading near very, very important support, and this is not a normal support. This is a very, very strong support. Not a strong support, very, very strong support. Okay, I repeat. Now prices have moved down. Okay, over here we have triple positive divergence in the price, due to which we had a short-term pullback. Okay, now if you see, if you compare this low with this low, yes, probably we are lower. And if you want to cross check it, you can use the line chart. Yes, we are lower, but the RSI is not made a new low. Is it a positive divergence? According to me, no, it's not a positive divergence, but we have to keep a watch on it, because at times, in case if markets decide, overall Nifty, other sectors, they try to take a U-turn, you'll have to keep close watch on the relationship between the price and the RSI. If you see some sort of positive divergence building up over here, especially if traders are holding any negative short side positions in the real estate sector, if there are some positive divergences over here, be vigilant and think of trailing your stops. But otherwise, apart from that, if that happens, I'm using the word if, मैं ये नहीं बोल रहा हूँ कि यहाँ पे positive divergence बनेगा, ये नहीं बोल रहा हूँ that यहाँ से market घूम जाएगा. What I'm trying to say is, my friends, in case if there is a positive divergence, only then. But if that does not happen, if that doesn't happen in this sector, then chances of this sector going on the downside is slightly higher, as it is one of the weaker sectors along with the IT pack. Mid-caps, the weekly time frame charts, sideways, I should say. Monthly is very, very strong, I should say. The daily time frame chart slightly on the weaker side. So I think once we start going on the downside, the next support zone will be 53,300, and from 53,300 to this 55,000, this entire band is going to act as support. Okay, this entire band from this to this is an extremely strong support band for the mid caps. All right. So I think summing it up all, I would just say one thing: overall market is weak with pockets of strength, predominantly being the metal pack. Okay, the metal pack, the auto pack, the metal pack being strong pockets. Pharma, I think I would say that I still have doubts, but we should give it a chance and see what happens. PSU Banks are also outperforming, but I've always said that, you know, the heavier weightage always comes from the private banking space. So if in case private banking space do not perform, then PSU banking space also does not perform. Many other sectors are weak in the downtrend with a downside momentum, but we are also approaching important supports in multiple sectors. So I think next week is going to be very important and interesting to understand how markets pan out, whether they give it a bounce back or whether the supports are being broken and we go for a new low. All right. So I hope this particular video will help you to understand how markets are going to move in the next few days. Trade less and trade wisely. Thank you.